So I'm sure we've all heard we need to put our money into savings, but we also need to put our money into investments. Oh, and also we need to pay off debt. But with only a set amount of money to allocate between the three, what do we prioritize? Stay tuned. In today's video, I'm going to share with you the optimal order of prioritization between the three and what you actually need to maintain in each account for optimal financial health. Hey guys, what's going on? Welcome back to my channel. This is Alice and welcome back to Money with Alice, where we talk about all things personal finance, investing, and so much more. In today's episode, I'm going to discuss why you want to invest versus why you want to save, the prioritization order in which you should fulfill each of these buckets, and how much you actually need in each of the different buckets to achieve optimal financial health. If you haven't already, I really appreciate it if you can give this video a like, and definitely make sure to subscribe because it really helps with the YouTube algorithm. This will help us to reach a bigger audience and share financial knowledge with more people around the world. Okay, first I want to lay out some parameters of a cash inflow versus a cash outflow. So cash inflow is whatever you get money from. So for most of us, that is largely or completely our daytime job. So whatever we get as a paycheck for that is our cash inflow. Now what cash outflow is, it's the source of cash. So excluding our daily spendings and any sort of rent, etc., we sort of have three main buckets that we can allocate this cash outflow to, right? So it's either to your investments, to your savings, or paying off debt. So think of those as the three main buckets of cash outflow, which is fulfilled by the cash inflow, which is your paycheck. Now for the newer investors out there, I just wanted to clarify the difference between investing and savings because I've been seeing a lot of confusion between the two and it can be really confusing. While each of them play a very important role in creating the optimum financial health, they play very different roles and different contributors to your financial well-being. So what is savings, right? So savings, essentially what that is money that you put aside in the future in case there's an emergency. Ways that you can have your savings in is like savings accounts, like high yield savings accounts, your checkings account, but those are all stable money that you have in the back in case anything happens and you can spend it. So that's savings. Now investments, what investments are is that they're money that you put in today with the hope that it'll grow in the future by the time you need it. So some common ways of investment accounts include your 401k, your IRA. Usually as part of those accounts, right, you're putting that into some sort of investment, some sort of stock market investment. In the future, you're hoping when you're retiring, you get the money for a higher value than you bought it in today. This could also be like your personal trading account. So a lot of us might use like Robinhood or TD Ameritrade, Fidelity, etc., etc. This could also be like your passive investment account that you use like a robo-advisor for. So this is what I mean by investments. Investments is what you're putting in money today, hoping for that future you'll get some sort of growth. But with savings, it's that stable base that you're putting as an emergency fund backup in case you really need that money. So savings versus investments, while it's important to have both, they are very different in the way that they play into your overall financial well-being. Quickly, I just wanted to go over why you would want to save versus why you would want to invest. Now, the merit for savings is that your savings is where you're hoping that if any sort of emergency happens, like if you need the money for like paying a large medical bill or God forbid you accidentally become unemployed, this is what you're using for to float yourself for the next couple of months while you go through that hardship. Savings you usually put into like a savings account, some sort of high yield savings account. And usually those accounts are FDIC insured, meaning that up to $250,000 is completely protected by the government. So when you need that $250,000 in the future, you're definitely going to be able to take that money out without any risk of it becoming like $200,000 instead of $250,000. But the downside there is that compared to investments, it does grow at a much slower rate, but it is much safer than investments. Now with investments, this is money that you're hoping will grow in the future. But unlike a savings account, investments are a little bit riskier. When you put that $1,000 in, you have a risk of it going to $500, but you also have a potential upside of that going to like $10,000. So that's why you want also to have investments into your overall financial portfolio, because that creates additional upside on your portfolio where you put in the money today that could grow to a lot more money than it would grow in a savings account. Both savings and investments are extremely important to have as part of a healthy financial portfolio. So I would allocate a little bit into savings as well as a little bit into investments. So now that we've discussed a little bit between why it's important to have investments and why it's important to have savings and the role that they play into each of the accounts, let's take a big picture view and see between my investments, my savings, and paying off debt, what is the optimal order I should actually do and how much I should actually have for each of those. Okay, so whenever I get my paycheck every single month, every single 2 weeks, what is the order in which I should pay those back or in which I should save for those? First, I would pay off any high interest loans. So that's stuff like your credit card debt, that's stuff like your student loans. If you have any of those outstanding, try to pay back the balance down, because becoming debt free is a very important part of achieving financial health. Now notice how I said high interest debts. This is something we can cover in the future, but not all debt is bad. But high interest debts like credit card and student loans, those are bad. So try to pay those as soon as you can. Once you've paid down your credit card and your student loans, the second part is to start saving for an emergency savings account. This you should have like 3 to 6 months of living expenses, so when you need that money is ready for you to use. I recommend putting this into like a high yield savings account because that will generate a little bit higher of an interest, but that money is safe, and when you really need it, it'll be ready for you. So if you haven't seen a high yield savings account video, I'll link it right here. So be sure to click on it and learn more. Okay, now that we've discussed paying back debt, that's step 1. Step 2 is to have a savings account with 3 to 6 months. The third step and the third order prioritization is to put your money into investments. Investments are money that you're going to put in today with the most potential of growing more and becoming more when you actually need that money in the future. This is where you have the most upside, but this is also the most riskiest. Savings, if you put that money into the bank account, it's not going to miraculously disappear. It's also not going to become from $10,000 to $1 million. But investments is where there's potential for it to go really, really well and go up a lot, but there's also potential for it to go down a lot. So that's why in terms of order prioritization, I recommend first pay off debt, second put your money into savings for an emergency fund, and anything else remaining, put that money into investments. Now in terms of the order of investments, what I recommend is first max out your 401k. Max out the 401k up to the amount that your employer matches. So if your employer matches up to $10,000, max it out for $10,000, because that's free money that you're missing out if you're not maxing that out. Second, once you've maxed out your 401k match, put that money into the IRA. The IRA is another investment account that's for your retirement in addition to the 401k. Each of them have different legal limits, so be sure to check what allowed limit is for you to actually put into the account. But this is tax beneficial whether in the future or now. So that's why I recommend first 401k, then IRA. And if you're lucky enough to have any additional left over after you've maxed out your 401k and IRA, put that money into like a personal trading account. Open one with like TD Ameritrade, Robinhood, Fidelity, but put that money into some sort of like basket ETF where you'll have a very diversified exposure to the market. All right, so I know I've covered a lot in this video, and if you're still with me, congratulations on making it so far. Quick recap on the order of prioritization. Okay, first, put that money to pay off your high interest debt. So credit cards, student loans, pay off that debt. Becoming debt free is a critical part to achieving financial freedom. Step 2, use that money that's remaining for a savings account, for your emergency fund savings account. This should have like 3 months of savings saved up in case you actually need it for any sort of emergency and you're not going out there, going to loan sharks and asking for expensive debt. Rather, you're using that money that you've saved up in order to float yourself for the next couple of months. Now, once you've paid off your debt, you have enough money in your savings account for an emergency fund, put the rest of the money into investments. With investments, start with your 401k match, max that out, put the money into IRA, max that out. If there's anything remaining, put it into a personal trading account. Thank you so much for tuning into today's video. I hope you guys learned something about investments, about debt, about savings, and how to prioritize between the three. If you thought this video was helpful, please give this video a like and definitely subscribe so we can follow along each other's journey on gaining financial knowledge. And also, it really supports my channel, so I would super appreciate it. If you guys have any additional questions, definitely drop me a comment below and I'll definitely answer them. Thanks so much for tuning in, and I'll talk to you guys soon. Bye.